Good morning, this is Tim McGowan for the Finance News Network. US equities were sharply higher in Tuesday trading, ending the session highs as traders bet on strong corporate earnings reports and wagered that markets had found a bottom. The Dow Jones Industrial Average jumped 2.43%, closing near the highs of the session as gains accelerated in the final hour of trading. The S&P 500 gained 2.76% and the Nasdaq rose 3.1%. All three major averages are above their 50-day moving averages for the first time since April. The broader market index has gained almost 7.5% off its June 16 closing low. Investor sentiment has worsened to a point that some on Wall Street believe markets are set up for a relief rally ahead. The latest Bank of America survey of professional investors on Tuesday found investors showing dire levels of investor pessimism, with expectations for global growth at all-time lows and cash levels at the highest level since 9/11. The survey found the allocation to stocks in portfolios at its lowest level since October 2008, 1 month after the collapse of Lehman Brothers. A pullback in the dollar aided the rally. This was particularly the case for shares of tech companies with large portions of foreign sales that are taking earnings hits from the impact of the strong greenback this year. Meanwhile, stocks absorbed a weaker than expected print in the US housing starts, which fell 2% in June to a seasonally adjusted annual rate of 1.5 million units. All sectors in the S&P 500 were higher on Tuesday. Communications sectors and industrial led the gains, rising more than 3%. Solid earnings reports boosted the shares of many companies, even as a stronger dollar weighed on the results of others. Bank stocks outperformed, with shares of Goldman Sachs up 5.6%, Bank of America rose 3.4%, and Wells Fargo advanced 4.2%. Of note, there has been no US banks to downgrade earnings as yet. Meanwhile, shares of Halliburton climbed 2.1% as a sharply rising oil price this year helped lift profits for the oilfield services company in its most recent quarter. As of Tuesday morning, roughly 9% of S&P 500 companies have reported calendar second quarter earnings. Of those, about 2/3 have beaten analysts' expectations, according to FactSet data. Shares of Netflix popped 5.6% ahead of the streaming company's earnings report scheduled for after the close. Later in the week, Tesla, United Airlines, American Airlines, Snap, Twitter and Verizon are all amongst those scheduled to report. The Russell 2000 index, a benchmark index for small cap stocks made up of the 2,000 smaller stocks in the index, jumped 3.5% to close at roughly 1,800 points. That was its biggest one-day rise since January 6, 2021. Of note, lithium stocks continue to outperform as the demand-supply dynamic continues to play out despite volatile equity markets. Data from the Shanghai metals market showed that the demand for battery-grade lithium carbonate increased during July as downstream battery factories and auto manufacturers increased their operating rates. At the same time, battery producers reported lower inventory readings as raw material purchases were not able to keep up with the battery output. The higher output followed the rewarding of cash subsidies by local Chinese governments for consumers replacing petrol cars with new EV purchases. The measures were placed to revamp activity in the sector after demand for durable goods plummeted during the strict COVID lockdowns, in addition to contributing to China's goal of cutting carbon emissions. Of course, Australia is set to maintain its dominance in mined lithium production this decade, as supply is set to double by 2030. Data from Benchmark's lithium forecast shows we are set to mine nearly half of the world's lithium this year. Lithium stocks in the US followed the strong lead out of the ASX overnight. It will be interesting to watch whether a short squeeze plays out in the sector if markets continue to rally. Gold inched higher on Tuesday, helped by a pullback in the US dollar as investors brace for clues on the pace of the interest rate hikes from major central banks this month. Gold was expected to have a strong year based on its history as a hedge against inflation. However, that hasn't turned out to be the case, with gold futures down 6.4% for year to date. So what's pulling gold price lower? The US dollar, of course. The US dollar index is up 12.4% year to date to trade at levels not seen at since 2002, and that is creating a drag on gold. A pullback in the US dollar overnight alleviated some of the pressure we have seen across the commodity complex and gold, of course. One Australian dollar has strengthened compared to the US dollar overnight, buying 69.02 cents. Iron ore futures are pointing to a 0.8% fall. Silver was down 0.7%. Copper was down 1.6%. Oil gained 1.6% to $104 US a barrel. Bitcoin futures are up 8.8% and the SPI futures are pointing to a 1.2% gain in Australia today. This is Tim McGowan for the Finance News Network. Have a great day.